All right. Good morning. Good morning, everybody. So we're back at it again. They're focusing on demand destruction. I love that. Such an odd concept. As usual, first thing we want to do is take a look around the world, see what happened in the overnight session and in countries around the world. When you have something like Bloomberg News or the New York Times or something more generic like that, it's not bad. It'll usually keep track of there's Bloomberg Asia, Bloomberg Europe, gives you a little bit of news. But those are subscriptions that require cost to be paid. If you use something, say like Koifin, it's free. It has market news. You can choose global markets news around the world, kind of get an idea of what's been going on out there. And we're looking for big stuff. We don't want to crawl through here, kind of hitting and missing on the little things. We're just looking for any really big events or situations. The analogy or the example that I usually give is when that ship got stuck in the Suez Canal, right? That was an event, and we're looking for some event like that. Anything that can really stand out. Most of the time, obviously, you're not going to see anything, right? But you want to at least look. Once you've checked around the world, bring it into the US and start looking at the news for this morning. Who meet or beat this morning, and are they big enough to drive order flow in the marketplace today? Right? You can imagine what would happen, say, if Microsoft came out with a massive miss and took a gut punch to the downside and take our market with it. So it really matters when it's some smaller market cap, not too much, right? But you still want to take a look. That's usually something you want to keep track of on a day-to-day basis. Who's having earnings, and are they big enough to be impactful? So nothing's really standing out here. It's a continuation of the same discussion. Demand destruction. Yesterday, Powell had a lot to say. He really lit up the street, and the market reacted quite a bit to that. So there's Koifin, and then when you get past that, we want to know what's on the agenda today. What's on the books? What should we be looking for? You need a way to analyze the dollar. Unfortunately, just knowing that the dollar is up or that it's down is not enough. We need a why behind it. It's been pretty obvious why it's up right now, and that isn't going to change anytime soon. But later on, when we're finally out of this mess and on a, say, a quarter by quarter basis, when the dollar is moving, the why behind that dollar movement is really critical. There are times where the global market will buy into that dollar because they want to get into our marketplace. We've seen that when the Asian investors bailed out of the Asian markets and came over to the American markets, right? They started bidding up in the dollar so that they could then use those and participate in our market. So every time we seen that dollar bidding up back then, it was a real positive. We knew that we were going to see a lot of tech being bid up too. Now it's completely different. Firms around the world that don't want to go to cash and pay a cash penalty will go somewhere. Well, where are they going to go? You can't go to bonds. That's getting kicked in the face. Can't go to equities. That's getting kicked in the face. Right? So where you go? Go to FX. Well, our junk is better than somebody else's junk. Right? They're not going to get the peso. They're not going to get the ruble. To avoid the penalty of going to cash, they'll bid up in the dollar. And we use that like a gauge of global risk. So having a place that you can kind of keep your eye on the why of the dollar is a really good idea. FX Street, Usually gives a little excerpt in the morning about what the dollar's been doing. Not too much behind the move, but it's a good place to start. Then if you adjust your time frame on FX Street, it does a reasonably decent job of keeping track of most of the events out there on the day, and it will give you some form of anticipated impact level. The lighter and brighter the color, the less anticipated impact. This thing is not set in stone accurate. It's looking at historically what happens when the 52-week auction comes out, right? Something like that. So it may say that it's not very impactful, and then today it is. Or it may say that it's anticipated to be very impactful, and then today it isn't. So it's just a gauge of anticipated level of impact. If you go to Finance Juice, they also have them listed here on the side. And then as they happen through the day, they're still there, which I kind of like that because on Thinkorswim, when you go and look later in the day to see, what happened earlier, was there economics at like 9 in the morning, but now it's 3 in the afternoon, you won't see what was there, right? And this shows you what was there all day. So I like that. This one is also good to see what happened around the world. It's really handy when it comes to the European market wrap and things like that. Normally I'm logged in, but this is a browser that I use just for doing these streams, and I haven't logged into it on this browser, which is why it's giving me the pop-up mess. One thing I wanted to point out about Finance Juice is it has a tick stream on it that's free, right? Everybody likes free, 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 free. Without paying anything for it, this little strike tick, if you turn it on and it detects um, outsized flow in the S&P, it will make a noise, which is nice because you can just keep this thing minimized. You do what you normally do. You don't have to do anything else to it. It's just going to make noise when it detects positive or negative increased flow. And the two sounds are different. So one is a positive sound, one is a negative sound. Now, you get what you pay for, and this is the free one. If you haven't bought it and you don't have advanced uh, data flow on it, then it's going to be delayed or not perfect. But I can tell you, it gets my attention. If I'm doing something else in my office, I'm not really paying attention, watching the market, and I hear this thing start to go off, I go look at the SPOOs or take a look at the Qs, and sure enough, they're on the move, right? So it's a nice little, just a, hey, pay attention thing. I like it. Something to check out, right? Again, you get what you pay for. So if you're on the free account, it's going to be a little delayed. You don't want to lean on this thing as your go-to source for finding a trade. Notice the European market wrap. They do the same thing for Asia. They also do the same thing for our market, which means at the end of the day, go in and look at what happened in our market. If you saw something through the day and you couldn't find a why behind it, say you're watching the market and the S&P suddenly breaks to the upside 20 points, and you go looking for news on it and you can't see anything and you're trying to figure out what the heck was that? Look for the wrap at the end of the day and see what they have to say about it. Try to find the why behind it, right? One of the worst things that I think we could ever do is see a trend and then not know if we should get into that trend because we don't know what's causing it, right? Like suddenly we just break out and start running and like, oh man, I really want to get in that. And yet, when we don't have the why, we don't know how long it's going to last, whether we should trust it, and it just goes down the list, right? All right, so that pretty much handles the news. From there, simple and easy, bring it over to Thinkorswim. Now, I've had people tell me, oh, well, I trade futures. I don't use Thinkorswim. I have my broker's Ninja, my broker's Tradeovate. I don't care what your broker is. If your broker doesn't offer you access to the marketplace in all of the different markets that we want to watch, you're basically putting your nose on a tree and then saying that you're in the forest and you can't see anything. Why? Because the only thing you can see is the thing right in front of your face. Then what I hear is, oh gosh, trading is hard. Well, yeah, when you're not looking at anything. There are people around the world who don't have access to Thinkorswim. Try TradingView, try something. Get an analysis broker so you can perform analysis. Right? It doesn't have to be Thinkorswim, but if all you have is Ninja, or if all you have is Tradeovate, and you don't have an analysis platform, how are you supposed to see anything else that's going on out there? All of the markets are connected. For Market Watch this morning, I like to take the description, set it next to the time. If yours looks like this and it's just fully cluttered and hard to see what the heck is going on, just turn everything off. Turn everything off and then come back in and hit Econo Day event. Now we can see what's going on this morning, right? Check the econ, check the times. Watching the clock is one of the most important tools that you have. It's one of the most valuable tools you have through the trading day. What time is it? We do have petroleum status report today at 10:30. So if you want to trade like on USO, right, get primed up, ready for it. Check your options trades when the report comes out at 10:30. Watch for a move within USO. It's a nice little play when we get it. Right. Of course, sometimes it's a dud. So for the day, like we always do, there are three things this market can do: stay range bound, move to the upside, move to the downside. The likelihood of each, right? So right now we're range bound. We are inside of yesterday's RTH. We barely had an inside day breakout when we opened in Globex last night, and then we dumped it back down. There's every expectation that this is what we do for the week or for the day. I'm thinking week because these two yellow lines are the previous week's high and close. So we almost made it outside of yesterday's week. Almost. Like we've talked about before, the ranges can be divided into zones. So the first zone that you could focus on in the range would be our own Globex high to our own Globex low. Beyond that, range 2, which is still part of the entire range, would be Globex high to yesterday's RTH low. And then the third range would be all of yesterday's low to yesterday's high. When you break these three down, they're more like signposts. We made it this far, right? Where are we going next? What's our next target? Pivot points, on and on. I find it unlikely that we're going to stay in the zone, stay in the range. We're down 0.8%. We've got an ADR of 2.8. So from our current location, we'll just add 2% to the downside. That gets us at, call it 39.70 to the downside. That's our ADR, just our average daily range. So I'm not saying we're going there, but if we stay bullish or if we stay bearish or if we stay range bound, then we can lean into our ADR. We could move that far and it wouldn't be considered unusual. It wouldn't be considered extreme or unnatural or too far. That would just be a normal average move on the day. On the other hand, if we reclaim the 8% that we're down, 0.8%, and then we go the other way, it looks like we'll get through the expected move top. So basically just catching it from the close. We'll run 2.8 from there. And if you're looking at this and you're thinking that seems a bit extreme, like you're reaching, the current ADR is 2.8. So this is what our normal day range has been. I'm not reaching. This isn't extreme. It's just ADR, right? It's just what's normal right now. Now, what's the likelihood that we actually turn bullish and bearish? Well, the first thing that we would go back to answer that question is what's on the agenda for today? The CPI, it depends on which one it is, right? Which numbers come out. This is for the Bank of Canada. So that one's not really going to be that much for us, right? Of course, everything's connected, but this one isn't going to be the one, right? Then we got housing starts and permits. There's been a lot of talk on that with Bloomberg today, just because builders and costs and blah, 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 right? Everything just connects all together. So will it have any impact? Slightly, maybe, possibly. I would focus more on if there's going to be any more speakers today, right? Like yesterday, we had a load of speakers. They're at this big convention that's going on, and it's a 3-day convention. So we have to kind of be concerned about, well, who's speaking today? We can see that Evans is speaking today. Harker around 3. So, we do got some to keep our eye on, and that's going to be more impactful than anything else, right? When you try to think about, is this a bull pattern, a bear pattern? What's a rising wedge, head and shoulders, blah, blah, blah. Whoever's chipping their teeth at that convention and says something radical can tip the market a lot more than any kind of technical analysis on a bull flag or a bear flag or a rising wedge. As usual, we want to go out to the 10-day, 30-minute chart, look at the volume profile for the day. We want to look at the size of the box, and we want to take a look at any of the volume nodes along the side, looking for any exaggerated areas of volume resistance. The cyan line is an anchored VWAP, which we are above it, and we are also above the point of control. The way we approach this is, where are we at in this box? Are we at the low? Then we expect to go to the high. Are we at the high? Then we expect to go to the low. Are we near the point of control? Are we above it or below it? Are we moving towards it, or are we moving away from it? The one in blue is time. The one in green is price. Volume by time and volume by price. The one in blue is called a TPO if you want to find that indicator on Thinkorswim. It's not a custom indicator. It's just a regular indicator called TPO, time, price, opportunity. For our upward discussion, we do get into a nice shallow area. So we're not seeing any kind of volume resistance there. There is a little bit of anticipated resistance as we get into the value area high, which we already would have expected that anyways, because we're near the value area high. Makes sense. When we bring it into a 5x5 chart, which is the way we often make this discussion when we're talking about mapping out the 5x5, this is what we mean, right? A 5-day, 5-minute chart. And we want to look at any previous day's volume profile and carry forward the point of control. So for an example, back here on this Thursday, we had a point of control that day, the red line there, and we did not go back to that spot and hit it, right? On Friday, we stayed above it. We never touched it again. So that is now an untouched point of control. But you can see on Friday, we had a point of control. And the following Monday, we ran right through it. So if we had carried it forward, it was immediately taking out. And the same thing, the next day, the next day, and the next day. But this is now an untouched POC, point of control, often called a virgin point of control. This one would have been carried forward until it got wiped out on this day, right? That's the way it works. You can also carry forward the value area low and the value area high. I just find those less impactful, especially the farther away from them you get. So when we think about our current situation and where we're at, we want to make sure we're not going to hit a VPOC. So if we do get a rally in the S&P today, that is within our ADR. It's right around 4120. We're very likely to hit it. All right. First touch play when we get there. First touch play can get an entire day done, right? Make a mortgage payment. All right, so that handles the S&P. For the Nasdaq, we're pretty much sitting in the same situation. We have our range-bound market. Those ranges, again, can be broken down into different quadrants or zones between our own Globex zone and then all of yesterday's RTH, and then all of yesterday altogether. Notice how it provides benchmarks or midway posts, right? We made it this far, where are we going next? We make it this far. We made it that far, where are we going next? We make it this far, right? Each one helping us analyze and ask that question. If we continue to be bearish, where's our next anticipated target? Flip things over and instead start talking about what if we get bullish? What if something comes out, the news turns good, somebody is saying something positive, they don't get into demand destruction, and they decide to give the market a little bit of a shot of adrenaline and we get rowdy? We would have to deal with yesterday's close, our own Globex high, our Globex open, and then we can deal with moves to the upside. ADR in this is 3.8. Right? So take it from the close. What would a 3.8% move look like? Notice the NASDAQ, by the way, is already down 1%. So when we do the downside move, we can subtract that from it. 3.8 gets us right around 13,000 is really what I would target. I wouldn't aim for the 50, just 13,000. But we'll mark 1350 because that's the measure. There's your upside surprise. Right. And again, those levels, as far away as that may seem, it's just our normal movement right now. There's been plenty of times in the last few weeks where I've drawn a line and said, I know that seems like it's very far away, and I find it unlikely we're going to go that far. And you know what happened that day? We went that far. Right. So that's the kind of market we're in right now. To the downside, a 3.8% move would put us very close to 12.1. I won't haggle with that one. 12.1. There's our upside and downside move for the day. Now, what we've been getting is these sideways days, right? We've been getting a lot of these days in a row where we're just holding the line, maintaining the range. Use that linear line, start at the top, bring it down. You can see the sine wave, the waveform is very clear. High, low, high, low, high, low, high, low, high, low, right? All the way down. We're at a critical junction here. If we're going to see a change in sentiment, this would be the start of it. We would want to start to identify a higher low, right? That this doesn't come back down and create the next swing, that it instead builds some kind of basing structure and provides a higher low, and then we get another higher high, right? It'll be the start of the turn of the reverse, which eventually would form a very large cup. But in the last few days, we've just been maintaining within this range. And the longer we stay range bound, the more energy we build up. We just wind up more and more and more and more and more energy. Energy is not direction, so it makes no promises about where we're going to go. It only is an identification of a lot of pent up energy. So Friday, Monday, Tuesday, just holding this range and building it up more and more and more. Look for a resolution of that, right? Continue to seek the higher anticipated impact. The market breadth, by the way, in the last few days has been absolute trash. The only good thing about that we can point to is that when it's trash, you know to stand aside, right? There has been opportunities to trade, some really good ones, but we're not able to lean in on the market breadth the way that we normally would. Earlier this morning, we had a significant event where I put my mouse here in the ES, this spot, that move. You'll notice that that move even was in the bonds, and it was a part of gold, Bitcoin. It was in everything, right? That's it's not unnormal. It's just unusual. Stocks and bonds moving in the same direction at the same time. There was a catalyst that came and gut punched everything, including the dollar. Like everything went down right there. I don't know what it was. Right? It's 4:30 this morning. I don't know what it was. Pointing it out to pay attention to these kind of things when you see them. The oddity of it, right? Like that Facebook commercial with the four old ladies standing in a circle, and that one is saying, "That's not the way this works. It's not the way any of this works." Well, this is not the way it's supposed to work. So pay attention when something stands out that's doing something that it's not supposed to do. Right? I don't know what to do with it, and a lot of times we're not going to know what to do with it. But at the very least, it can warn you to reduce your position size, take some profits off the table, not get in if you were just about ready to take a trade, to stand back. Try to figure out what happened. Try to make sure that the move is done and over before you go forward from there. Right? Just use what you have as much as you can. In the Globex, we don't have, tick, trend, AD, vol, market breadth. We have these tools. It's all the tools we have. So try to use them as best we can. All right, Thinkorswim doesn't do an absolutely amazing job with this, but we're going to give it a try anyways. Things that have moved in the pre-market. Now, one of the things that you have to be careful of, and it doesn't matter where you're at, TrendSpider, TradingView, Thinkorswim, if you're looking at anything in the pre-market, make sure that it's not actually recording something that happened in the after hours, right? A lot of them are going to show you a move since the close, and it won't be too particular about where that move happened. Was it last night or was it this morning? Because then you'll see a change in price, and it will have nothing to do with anything happening in the pre-market today. It will have everything to do with what happened last night, right? So be careful about that. So for an example, we got Japan ETF. 56.99. So it's showing that it's up a lot. And it was one single print last night, not today. So it's not up this morning. It's not down this morning. Hasn't done anything this morning. It was just that single print. S&P oil and gas 142 this morning. So it's up. Possible rally. Just a continuation of the move from yesterday, which makes sense because we've got energy as well up this morning. Real estate is another one of those that moved last night, not today. So we ignore that one. Same thing with mid cap. Uh, value growth rate, don't even mess with it. And then we start to get into what is flat this morning. None of these have had any print yet. So communications, building materials, junk. We start to look at what has made some moves this morning. Got emerging markets slightly down, not by much. Healthcare, minerals and mining, industrials, finance, Bitcoin. So the Thinkorswim can do this a little bit, not very well. Um, you can try to use something like Use the News. It does have a tab in there called Pre-Market Movers. And then there are pre-made watch lists inside of Thinkorswim too. All these ones that say public, those are pre-made Thinkorswim watch lists. And if you scroll down and go down far enough, you'll get to things like the top 10, levers and losers, and notice in there pre-market movers. Right. So there are some tools. Thinkorswim just doesn't do a really good job at it. And one of the things that I like to focus on is change percent in the pre-market. How much are we up in the pre-market? How much are we down in the pre-market? How many names are up 1% or 2%? We can gauge the level of market participants out there, the strength of the sentiment by gauging how many names are up or how many names are down and by how much. And then focusing on the flip plays. We've seen a lot of those lately, right? Say the first 30 minutes of the day, we're already gapped up. We come into the open, we rally for 30 minutes, then they flip it over, dump it on our head, and run it short for the rest of the day. Well, if you come into the game already anticipating that from the jump, focusing on the names that are already up the most to start with, then we have to find those names that are already up the most to start with. So the heat map here, S&P 500, we want to change this to pre-market change. We need a filter. I don't need 500 names, right? I want to focus more on 100 names. So by market cap, we'll make that adjustment. I can tell you it's kind of hard to hit 100. Just get close. 96 is close enough for me. Another thing you'll notice is that it's still gray in a lot of these areas, right? So Berkshire is gray for an example, or Visa or Citi. It's plus 20, 0.2%. Why has it not changed yet? And the reason it's not changed yet is we have to adjust the color scheme. So here where it has an X1, adjust the multiplier. Instead of it being whole numbers, turn it into tenths. And now we have a more responsive heat map. The FANGs stand out, right? Markets by market cap, Amazon, Tesla, Apple, Microsoft, Google. You can see just by their box size alone that they are very large in their market cap, right? They're the MOTs that we talk about, MOT, monsters of tech. So we want to ask the question, what sectors, what industry, how's the peer group? If we find one name up, want to look at who else in that sector or that industry or in that peer group is also up, who isn't, who's got the better options. If you're on the sell side of anything, right, then you want to focus on who's got the better or the higher IB rank. Keep in mind that the Nasdaq 100 does not have financials in it, right? So when we're looking at financials in the S&P, it's important to keep that in mind when you leave this and then you go over to the Nasdaq, looking at the same kind of idea of what's up, what's down, by how much. That you won't have that. A couple of chip sector names are up this morning, and it stands out. So from here, we go to the Nasdaq 100. We don't need a filter. It's already 100 names. We want to adjust the multiplier here. Again, the monsters stand out. Let's do it that way. One of the negatives when it comes to TradingView is I can't run the scanners on it the way I want. It runs a lot of its own defaults. You can't tell it, hey, there's my watch list here. Use this. So we're looking at the sectors. Want to pay attention to the opposite of everything else, right? So if everything is down, what's up this morning? The devil's metal, energy. I think cloud is still from last night. And for the stuff that is down, what's the most down? Like semiconductors. The S&P sectors are an 11 sectors. They're like the legacy sectors. Yeah, Namita, it took a beat down. And their earnings, if you go back, go check out their earnings. The move that we saw really doesn't warrant that in relation to the earnings, but yeah, everybody's freaking out. All right, so the chips down, crypto also mostly down, right? At least the ones that are heavily vested in blockchain. EV market, Yeah, maybe I'll come back to that. And the pot stocks. All mostly down, right? So across the board, everything in play. I have a paid plan for TradingView. It is a backup. Um, I live on my trading, and if a broker goes down, I can't just sit on my hands and not trade. So when Thinkorswim was having issues, and Thinkorswim is my analysis broker, I wanted a backup, so I got TradingView. Later on, when I started trading on Tradeovate with futures, Tradeovate was doing some updates and it broke some of its tools. It was down, and you can link your Tradeovate to TradingView and continue to trade from there. So I get my money's worth out of it from both sides, right? I can use it for a backup analysis platform, and then I can also use it for a backup trading platform. Mostly pay the bills with futures, so it's imperative that I have a backup that way. And it's not one broker that has an issue, right? Sooner or later, every broker out there eventually at some point has some issue. It's just the way that it goes. So TV is my backup. Um, a little tip: if you don't have an account there, subscribe to their free trial, use it, let it expire, let it cancel. Wait for them. They will send you an email and they will offer you a heck of a deal, and you can pick up a yearly subscription really cheap. I waited for Black Friday because it was around that time frame when I first got it, and now I always re-up during Black Friday when it's on sale. But I've had people who do the free trial and then let it expire and get the email from them, and they get a better deal than I got during Black Friday. So, just a nice little tip, right? Run the free one, let it expire, and then let them send you an email, and they'll offer you a heck of a discount. And then, if they don't, say I'm wrong and they've decided that they don't want to do that anymore after a week or a week and a half, if they haven't sent you an email, just go back over and go ahead and sign up. Right. But at least that way, you should be able to get one heck of a deal. All right. As usual, there is always something for those of us who say want to go long that are not necessarily trading options, and we're more leaning into stocks on a day-to-day basis and kind of asking the question, is there anything out there that I can trade to the upside? And as you can see in my two lower watch lists, there are plenty of names that are up this morning, right? There's usually something somewhere that you can focus on. Energy and finance have great liquid names to trade that are, for their size, they have a lot of movement. They're reasonably, with reasonable in their cost size. For me, I do trade options. So on my two lower watch lists here, these are all names that have weekly options. There's like 600 names that have weeklies. So it's a really long list. TrendSpider won't let me make a watch list with 600 names. So I had to break it in half. But still, that those two watch lists are really just one watch list. Basically, since the start of the year, it's been energy and finance on the intraday, just for the way that I trade, my style. Those are like a benchmark go-to every day. If there's something else that I can lean on, sure I will. But if it's a day where almost everything is heading to the downside and I want to say go long in something, this is my go-to. You can always lean in on the sectors. When it comes to the sectors, grids like this, I've built them for every one of the sectors. They're at the Bullish Bears Discord. You can go and get it from there. Just import it and name it by whatever sector it is, right? So if we want technology, go to XLK. These are by weight the top 8 names in this ETF. So if we've seen that tech was doing good, we can go in and see, okay, which one of these names would I want to trade, blah, 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 right? Or finance. top 8. Now they were, when I made them, this was their order by weight, but it's been a while. So maybe Bank of America has a larger market cap now than JP Morgan, or that it represents a larger cap inside of XLF. So things may have changed a little bit, but these are still the top 8 names most likely in that ETF. If it really matters to you, you can do a little bit more research and figure out their new order, or if one of these lower names, like maybe BlackRock, got bumped for a different name. For me, these are good enough. Right? When you look at the market this way, you'll start to notice after a while pairings or groupings. So, for an example, Citi, Goldman, and Morgan Stanley usually have very, very similar charts, while at the same time, JP Morgan, Bank of America, and Wells Fargo will often have very, very similar charts. And what you'll find a lot of times is that one of these three will make the move first, and then the other two play catch up. Or one of these three will make a move, and the other two will play catch up. So it's a real nice heads up. They also make for nice validation or confirmation signals. Speaking of validation and confirmation, today we're going to be running a webinar at the Bullish Bears, and we're going to talk indicators. I don't use indicators to trade. I use them for analysis, sure, but I don't get in or get out just because I see something on an indicator. That doesn't mean other people don't. If you're going to use indicators, it would really help if you knew what the heck it was supposed to do, who built it, how it was designed to be used, what settings you should change. So I gave out an alert yesterday. We're going to have a live stream today talking about indicators, and people have already started putting in their requests. There's way more than I can cover today. So it's very likely that every Wednesday, for the immediate future anyways, around noon, we're going to be running these webinars and discussing indicators. It will be recorded, so if you can't make it, you'll find them in the archives. They're very likely going to end up on the Bullish Bears website. And there's no restrictions on what we're going to look at per se, but when I first got into trading and I started using Thinkorswim, I dug deeper because I wanted to know how to make my own indicators. Well, if you're going to code your own stuff, you got to kind of know how it works. So I got really good at finding resources on indicators, and we're going to get into a little bit of that today. And then we're going to start working through the list. Right? If this is something that interests you, come on by. We'll be there at noon. I'll post a Zoom link into the chat, and we'll run about an hour or two. It really depends on participation. I don't like talking to myself. So if I'm talking and I'm not seeing any kind of response from the community, I will just give up and shut it down and walk away. So we'll see how long it goes based on the amount of participation that's there. Speaking of streams, I'll be into the main chat room and start to stream around 9:15 or so. I'll see y'all there.